My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'm doing my friends, just trying to make a little money. My job not to entertain, but to educate, teach you. Call me, 1-800-743-CBC. Tweet me, Jim Cramer. Never get tired of all-time highs. We're experiencing a pretty terrific time for the market.
House of pleasure.
Which is exactly what I said would happen when the Fed starts cutting rates while the economy's still solid. That's how you get days like today. The Dow gained 410 points, all-time high. S&P climbed 0.61%, also an all-time high. And the Nasdaq advanced 0.33%. Take what happened today. Some of the major banks reported this morning. The numbers were just, frankly, spectacular. This has happened before, but because the Fed was in a tightening cycle at the time, the good news just didn't matter. Now, though, the Feds are Fed, so we can extrapolate better times. That's why the strong earnings from Wells Fargo, JP Morgan, and BlackRock were greeted with such a resoundingly positive reaction. You know, it wasn't like that early morning when the companies reported. JP Morgan stock was initially unchanged. Wells Fargo stock was getting hammered mercilessly. Although BlackRock's numbers were so extraordinary, there's no way its stock could give up any ground. But once we heard the conference calls from JP Morgan and Wells, we realized, wait a second, maybe the best is yet to come. And then we were off to the races. Maybe that's going to be the pattern of this nascent earnings season. Oh, we're going to find out soon enough. Next week, the numbers will be flying in, and we'll be, if we see if today's positive action can be sustained. Which brings me to our game plan. Now, on Monday, we won't be focused on earnings. There's a lot of other stuff happening over the weekend. For instance, I think we'll be parsing the Chinese stimulus package that's got to be unveiled. The China rally is stalled, but it can get rolling again if the Chinese Communist Party keeps throwing tens of billions of dollars worth of stimulus at real estate, at the stock market. Now, I have blessed buying Alibaba, the Chinese Amazon, and Baidu, the Chinese Google. But those are the only two I can countenance up here. They have trustworthy financials, very good balance sheets. By the way, they're not all that expensive. We'll have a very big test for the financials on Tuesday because Charles Schwab, Goldman Sachs, Bank of America, and Citigroup will report. Schwab's one of the largest retail brokerages in the country, but its last few quarters have been greeted quite poorly. Bond portfolio issues, arcane issues involving cash sweeps. I think these problems are past tense, and the situation is compelling. But I feel very lonely. Maybe this is the quarter where people will finally look at the future and how fabulous Schwab's franchise really is. I can't be sure, but they should. As for Goldman Sachs, where I did work at one point, I'm thinking it's going to blow away the numbers and the stock goes higher. Bank of America caught a big break today. Warren Buffett has sold so much Bank of America stock now, he's under 10%, where he no longer has to report that every time he sells stock. Well, that'll help the stock immensely. Why? Because it wears you down to see that Warren Buffett sold some shares every few days. You never want to be on the other side of a Buffett trade, right? That said, Bank of America might have borrowed some of the upside today for next week because it was up 5%. The street's fallen in love with the stock of Citi. Rather amazing. Under the leadership of Jane Fraser, sometimes I think she could say anything and the analysts will praise her. She's turning Citi around, though. Not an easy task. Hard to remember the last time I saw so much confidence in this institution. I don't share it yet because I like so many of the other banks. Now, but next week's not all about banks. We have United Health Group, and this Dow component just doesn't miss. UNH is the only health insurer that regularly beats earnings. Nothing's clockwork in this business, but when this one misses, the stock barely goes down, and when it beats, the gains are huge. Interesting risk-reward, huh? Hey, speaking of healthcare, Johnson & Johnson caught a huge break in its talc lawsuits this week. A federal judge has allowed a prepackaged bankruptcy to plan to contain the damages, and it's being held the case in Texas, much more friendly than New Jersey, where a lot of people felt it might be. Is it the beginning of the end of J&J's multi-year legal overhang? Could be. That means we can finally start focusing on earnings again, and when we get those earnings, especially for the pharma business, I actually think we're going to like what we see. We probably won't like what we see when we get the numbers from Walgreens, though. But the bar's so low with this drugstore that maybe it won't even matter? Yeah, it's been that bad. My Charitable Trust owns the two big stocks on the Wednesday docket. That's Morgan Stanley, the big brokerage firm, underwriter, and Abbott Labs. Morgan Stanley was a real headache for a while as the bears kept tearing apart their wealth management business. Not anymore, though. Ever since Ted Pick came in as CEO at the beginning of the year, we've seen buyers swarm in on any weakness. Stocks had a big run, but you know what? It still yields 3.3%. I say hold on for the ride. Abbott Labs is mired in litigation, too, this time for a specialty baby formula that plaintiffs claim causes grave harm or even death for their infants. But last week, the FDA NIH and CDC came out and they said they found no linkage, no conclusive evidence that Abbott's formula causes the illness. Abbott lost a case not that long ago for a huge amount of money. It's litigating another one now in the same venue. I think it could lose that one, too. But the FDA, NIH, and CDC comments could potentially turn the tide in Abbott's favor going forward, which would be worth a great deal to this $116 stock. Now, please don't forget, I'm going to go over these two. When I see myself there, it's a little awkward, but please don't forget this guy, okay? Well, yeah, because we have our CNBC Investing Club meeting at noon on Wednesday. We have 2 initiations. Chef Mark's going to be awfully busy and a host of things to say about the fourth quarter. You'll want to watch. I promise to keep it rolling. Thursday, Taiwan Semi reports. What can I say? This is the company that manufactures NVIDIA's chips. The stock's been very, very strong, really ramped today. Call's basically in the middle of the night because the time zone difference. Don't worry, I'm going to set the alarm and I'm going to listen. No, forget the alarm. I just won't go to sleep. After the close, we get results from Netflix, and the street's been all over the place on this one. I think it'll be good thanks to the new ad tier, and they're about to release Squid Game 2. Is that like Squidward? Is that like SpongeBob? I don't know. I'm told it's going to be a guaranteed worldwide blockbuster. It could bring in new subscribers from around the globe, not as creepy as SpongeBob. Finally, Friday, we hear from Procter & Gamble, and I fear what they're going to say about China. Last quarter, their Chinese numbers were terrible. I don't know if they can change that in just 3 months. The stock went up to 171 today. That worries me. I think it's too high. We sold the stock for the Travel Trust this week. I think there are better places to be. SLB reports, and the old Slumbers Ace just hasn't been able to catch fire despite the bounce in oil for the last 2 weeks. Sure, it's up a high single digits on a percentage basis, but the number one oil service companies had a tough time because the Saudis keep saying that oil prices could be low for long, and you don't want to go against the Saudis. Finally, here for one of my favorite companies, American Express. The last 2 times it got hit, I told you to buy it. That was right. Maybe the 3rd time's the charm and it won't even go down. The Amex conference call is a great affair because the company gives you so much information about who's spending, what people are doing, Gen X, Gen Z. They got it all. If you monitor this one, if it gets hit, I'm going to tell you it'll probably be a buyer. It's been right, and I'm not going to change my view. Here's the bottom line. We're at the beginning of one of the year's 4 reporting periods. Probably, I told my wife today, the most exciting. I can't believe that I still get fired up for this, but man, do I ever. They're jumbled. They're open to a lot of invitation. They're fast. So listen to the calls. Ponder a moment, and only then should you pull the trigger. Marcus in New Mexico. Marcus.
Jim, how's it going, man?
Man, I'm telling you, I'm just coming in hot. How about you?
I'm coming in hot as well. I'm sorry about your Phillies. I hate to see them go out, but I think the 76ers are going to make you happy this year in basketball.
Well, I used to be a I sold Cokes and ice cream at Vet Stadium, and I love the Phillies. My mom and I love to listen. That's what we did together. How can I help you?
Yeah, the stock I'm calling about is VRTX, Vertex Pharmaceuticals. I know there's a lot of hype around the AI healthcare megatrend. I know Jensen Huang, the OG, is super excited about it, as well as some other CNBC contributors. And I just wanted to know if Vertex was a quality company to play this megatrend.
Okay, the big thing you need to know about Vertex is what it comes down to is whether their anti-pain drug is both, 1, not habit-forming, and 2, no side effects. And I've got to tell you, I'm a believer in Vertex. I regret at 300, I got the call to buy that when I was at the Super Bowl. And I was with a doctor who just said, listen, Jim, you should be just in Vertex for your Travel Trust. And, you get these random things, people say it, and you write it down, and then you don't follow up, and you're the worst for it because readers and viewers of the stuff that I've written and talked about have made me more money than almost any other source. Let's go to Robert in New York, please, Robert.
Hey, Jim, I was just, it's a funny story. I was having a martini, a phenomenal dirty martini over at Toku in Manhasset. And I'm sitting at the restaurant, and the guy next to me says, what are you doing? I said, I'm calling into the greatest stock guy on Wall Street, Jim Cramer. And the guy turns around, he says, that guy's right 95% of the time. And this isn't made up. This isn't made up. This is 2 seconds ago, okay?
Tell that for you. Listen, 2 on me. Okay, let me give you my American Express card number. Here, just you put it up here. No, I mean, first, I got to thank you. You made my week. I mean, honestly, it's been a long, hard week. You just made my week. Drinks all around. Everybody. Water. You have a water, and you get a water, and you get a water. And a dirty martini, why not? Let's have a dirty martini. He thinks this is water, this guy. I love it.
Anyway, Jim, this company provides observability service for cloud-scale applications. They have 28,000 customers. They have cash equivalents of over $3 billion. They've been beating every quarter with revenues through the roof. I think they're well-positioned. You weren't that crazy about them in August. You said it's a good company. I don't know if I can trust them, but I think you can because they've been proving themselves. Data dog.
It is a good company. I have not liked Enterprise Software, but Enterprise Software caught a bid this week. Atlassian. There's some takeover talk. We know that MongoDB is very interesting. JFrog. If it's got a dog or an animal's name in it, I think people are just like, wow. But I will tell you, remember, it's Enterprise Software. It ebbs and flows. It ebbs and flows. And right now, it be flowing. And thank you. Tell that 95%er that's just, I wish I were that good, but I thank him very, very much. And I thank you, too. We're just getting started with the earnings season, which you know I love. It's always open to a lot of interpretation, though. So make sure you do some homework before you do any buying. Make sure you have your models ready. You look at all the numbers and you say, I get it. Mad Money tonight. Last night, Tesla held its We Robot event, highlighting some of the futuristic technology companies have been working on. But the stock fell in response. So I'm going to break down my key takeaways, sharing you what I took away from it. Then, you called in on bell ring brands. And I had to do a little more homework on this one. I'm turning my homework in on the company behind Premier Protein and Power Bar. And regular viewers know I'm always preaching the importance of diversified portfolios. So tonight we're going to be playing Cramerica's favorite game, which is MI Diversified. See if your portfolio passes the test. And stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.